We have with us a very, what I, a helpful guest. I think she certainly helps people in her neck of the woods. Katie Naftzger is with us, and I'll have her tell us a little bit more. But Katie, welcome to the program.
Thank you, Don. Thanks for having me. Happy
Oh,
to tell you a little bit about myself and my background. Uh,
okay. Well, first, let me
Katie,
ask the question so that we get them on the record. Tell us a little bit about your personal background, and then what you're doing, which I find fascinating, and finally, where people can learn more. So it's all yours now.
well, thank you, Don. I'm very excited to be here with you today. Katie Naftzger, I'm the Community Investment Officer at the Federal Home Loan Bank of Chicago. But before I got there, I can tell you sort of the origin story. I was born and raised in Chicago, Illinois. I left Chicago to pursue my undergraduate and graduate studies focusing on public policy. Returned to begin my career in Chicago after that. And I've now been over 2 decades in the affordable housing and community development finance space, much of that time with the Federal Home Loan Bank of Chicago. As the Federal Home Loan Bank of Chicago, which we'll talk about more today, has increased our work in the space that I work in, there's just been tremendous opportunity for us to grow and expand the impact of that work in the states that we serve. So I'm currently in the role of Community Investment Officer at the Federal Home Loan Bank of Chicago. And in that capacity, I oversee the development and implementation of the bank's community investment strategy. When we say community investment, we're talking really about affordable housing and community development, so economic development. We have products and offerings in both of those areas. I also lead the bank's community outreach activities. In order to offer products that are relevant throughout our district and to the members that we serve, we need to understand what the needs are in their communities at the ground level. So one of my hats I wear is around community outreach, making sure we understand the needs that are emerging in communities around things like access to capital for small businesses, for example. I also work hard to forge partnerships with other organizations throughout our district doing similar work. We don't work in a vacuum. There's lots of folks working in this space, and the more we can amplify what each other's doing and work together and collaborate, the more impactful we can be.
I'm going to stop you right there and ask you a question. What is a Federal Home Loan Bank?
Yes, that's a question I get a lot. This system has been around since the 1930s, but it's something many people don't know about because we are not consumer facing. We're a business to business type of bank. There are 11 regional federal home loan banks. We each serve a separate collection of states with no overlap. We are all operated separately. We have our own boards of directors, but we have some things in common, the 11 of us. We are government chartered. There are federal regulations governing what we do, and we can work outside of those as well, but there's a framework we work within that is sort of administered to us through the Federal Housing Finance Agency, our regulator. We are all member-owned cooperatives. In Chicago, we have roughly 650 member financial institutions. This includes banks, credit unions, CDFIs, insurance companies, all financial institutions that can access our products and services. So these 11 of us, there are things we do that are the same, that come to us through regulations and sort of that mandate from our federal charter. There are things we do that are unique to address the unique needs in our own districts. The Chicago Federal Home Loan Bank, where I work, our footprint is Illinois and Wisconsin. So financial institutions chartered in those 2 states are eligible to be our members, and our products and services primarily flow to our members and to their communities through them. So it's a business to business in that respect, but we are very focused on the actual end beneficiaries as well. From where I'm sitting, I'm looking to understand members' needs in meeting community needs because our products flow through members to their communities.
Well, let me stop here. Our audience are primarily small businesses under 50 employees. Can we concentrate on that and tell us some of the products you work with to help them?
Sure. Sure. So your audience will be familiar with the critical role of small businesses in driving economic health and economic growth. So I don't need to make that pitch because I think that's well understood in this context. But small businesses are incredibly important to local economies. They create jobs, they provide critical goods and services, they contribute to the livability of communities. And they're, one thing that we've found is universal across the two states we serve is the need for access to capital for small businesses. That need for capital may look different in different places, or even within a single place for different businesses. Some businesses need sort of that point in time injection of capital for a specific need. Other businesses need more ongoing access to capital. Those two needs suggest different kinds of products, grants versus loans, for example. So what we've done at the Federal Home Loan Bank of Chicago is develop products to serve small businesses on both sides of that need. On the grant side, we just launched a few weeks ago our annual round of our Community First Accelerate Grants for Small Business program. We funded this at $19.5 million this year, just so that our members can tap this source of funding to provide to small business customers that they work with. So small businesses working with our member financial institutions may have an opportunity to access those funds through them. The grants are up to $30,000 and can support purchase and improvement of property, equipment, workforce development, technology upgrades, that sort of thing, things that position businesses to grow and develop. So on the grant side, that's sort of the flagship program that we are focused on right now. To give you a sense of kind of how it's been used in the past, we had one grantee last year in Milwaukee, Bayview Printing Company. It was a women-owned historical letterpress shop. They used the grant to modernize their space and upgrade their equipment. They received $25,000 through last year's program. And while that may seem like a drop in the bucket and like the broader ecosystem of small business in Milwaukee, for that business, it was a game changer. So it changes how they are positioned to do their work. It changes the block they're located on. It changes the experience of their workers. And those ripple effects of that single point in time grant kind of flow out from there. And so we do track some of that. We try to capture those stories and understand the impact because we know the impact is not just that immediate point in time purchasing of equipment. There's things that flow from that that make a big difference for the business themselves and for the community. So that's what we have on the grant side as our sort of flagship grant program for small businesses. We also offer lending products.
Let me interrupt you to ask you a question. Now, these grants are they a minority, women-owned, or how do you decide who gets this grant?
So the eligibility for the program is let me back up. There are eligibility criteria for the program that any business receiving the grant would have to meet. So things like the size of the business, they have to be located in Illinois or Wisconsin. There's some parameters that businesses need to meet to qualify. The overall size of the business can't be huge. Per the SBA standards, small businesses can actually be very, very large. We narrow that down a little bit. So there's some requirements like that all businesses have to meet to be eligible. Beyond that, we've identified a number of priority areas, and businesses receiving the grant have to meet at least one of the priorities. So it could be that they're over 50% minority owned, or it could be that they're located in a lower moderate income census tract. But those are those are a couple of the priorities that would qualify. There are several. So businesses don't have to meet those criteria to get the grant. They just have to meet one of a list of a number of priorities.
Okay.
That makes sense. And then in terms of how they compete for grants, it is a non-competitive program on our side. So if a member comes to us with a business they'd like to fund that meets the criteria and meets at least one of the priorities of the program, we're not judging it. We are saying this qualifies, and then we're providing the grant. The member financial institutions may have their own process for determining which of their customers receive these. They may provide either one grant of $30,000 to a single business, or 2 grants of $15,000 each. So they may be hearing from multiple businesses that want these, and they may have to develop a process for determining who to submit to us. But it's non-competitive when it gets to us, the applications that come in.
Well, let me
Does
ask
that
you
make
this.
sense?
No, no, this is fascinating. But let me ask you this question. Um, uh, how does one, how would I or any small business in their locality find out who is in such a home loan program? Who isn't? I mean, how does one find those things?
We have a list of our membership on our website. You can search by Illinois or Wisconsin, the two charter. They have to have a charter in either one of those states. There are complete member lists on our website. That's not to say every member will want to participate. That's going to be a business decision they make. This is a hugely popular program with a lot of interest, so a lot of members do want to participate, but they are not required to. So a small business could look to see who our members are by looking on our website. We do have a requirement that the small business has to have at least 1 year of relationship with the member. So a business couldn't cold call a member they don't know and have them submit on their behalf. We want the member institution submitting the application to have some knowledge of the end beneficiary. So that may be that they are a banking customer, they might be a borrower, they may be a vendor that the bank works with, but there needs to be some relationship, so to eliminate the sort of cold calling. And we want to make sure members are submitting businesses that they have confidence in, they understand, and that they know.
Well, I'm going to ask a stupid question. Like for myself, I deal with Bank of America, uh, uh, but they're a national bank across all. Well, you would have to go to North Carolina because they're based in North Carolina. How do you decide where an institution belongs? Bank of America obviously is in Wisconsin as well as Illinois.
Yeah, that's the beauty of the federal home loan bank system. We have large members and we have small members. So we have small members where there's not even branches. There's a single, you know, storefront on a main street, and that's the only location. We also have very large financial institutions. Bank of America is not one of our members because it goes by where even those large institutions have charters. They can choose to be a member of a federal home loan bank where they have a charter. Some have charters in multiple places, so that may open their options for which federal home loan bank they can work with. But charter location is what drives which banks can be members where. And even big, we do have, if you look at our list, there are some very large institutions on that list, as well as some very small ones, and they have equal access to this product. So just because you're a large one does not mean you get more bites at this apple. So it's a
I
sort of
would
an
think
equalizing program.
I would think actually if you found a local bank, because local banks or um, credit unions, et cetera, tend to be closer to their customer. Certainly, they're closer to than Bank of America is to me.
Exactly. Yeah, no, they know you better, right? They know you.
Yeah.
They know their customers. That's been one of the really fun things about this program is that the stories that come in from our members afterward, telling we had one member telling us a story last year, or I guess it was post COVID. They had only one pizza shop in town, and that was where everybody was getting their carry out, and because nobody could sit down in a restaurant because of COVID, and everybody's doing, and the pizza oven broke, and the whole town had no pizza. There was no other pizza places in a rural area. So the member accessed one of these grants to help them buy a new pizza oven. And the impact of that during a time when everybody's feeling isolated and stuck at home, and it was huge. And so that's the kind of thing that, because it's a community bank, they know that story. They knew enough to know that that was a need for this business, and they were able to step in and provide that as a partner with us. So really incredible stories of impact coming out of these. And this year we could see 1,000+ grants this year, given the level of funding we've put to this. So that's going to be the really exciting part, is to see how these get used. And then that informs the go forward, right? We see what works and what doesn't every year, and we refine it.
Excuse me, you're saying your home loan will do 1,000 of these grants. Did I hear you correctly?
Yes. So to give you a sense of the growth of this program, in 2022, we launched this with significantly less resources. We did 34 grants of $25,000 a piece, or roughly, that's sort of the ballpark. 34 grants, hugely oversubscribed program, a lot of unmet demand from our members. So we increased the budget last year. We did more last year. We've increased it by quite a bit this year. And we have the potential to meet demand from every single one of our members. If every member submitted one grant, that'd be over 600 application. It'd be over 600 applications. They actually can submit two, 15,000 and 15,000 to submit two per member. So we could see over 1,000 grant applications. We just don't know. It's TBD. We'll see where we get traction with members, and then we always evaluate that and then make changes going forward to try to sort of increase the relevance.
Well, let me ask you this question. Does it have to be a commercial? For instance, can it be a nonprofit?
It cannot be a nonprofit. That's something that we have gotten some questions about. And this year's program, it cannot be a nonprofit.
Okay.
That's a parameter that we are exploring and trying to understand better. If there's a need there and this is a fit, that's something in the future we can look at.
Well, but now, is this a program just you have, or does other home loan banks have it?
This particular program is one that only the Chicago Federal Home Loan Bank has. Every federal home loan bank has to offer a number of programs in common. This is not one of them. This is one that we developed in the Chicago district to meet a need we identified. But many of the banks have other things to serve small businesses outside of the required regulatory programs. So we have this. Others have other things that are equally impactful to support small businesses. There's no single clearinghouse where you can look and see every bank's program side by side. You do need to look you go bank by, you have to go bank by bank and look at the product offerings on their websites and that sort of thing to identify what's available.
Well, let's back up. The name of your program and what's your title, so we can people can know a little bit more.
Our program in the Chicago Federal Home Loan Bank, which serves businesses located in Illinois or Wisconsin, is called the Community First Accelerate Grants for Small Business.
Okay. No, like I say, I've been in the small business area for 21 odd years, and this is the first I'm even hearing about things like this.
I do want to draw your attention to the other sort of track of what we do to support small businesses. This is the grant side. So purchasing equipment and that one-time infusion of capital for a specific purpose. We also lend to our members at discounted rates so that they can in turn lend to their small business customers and pass that discount through. So for small businesses that may be positioned to borrow, but need a reasonable rate on that borrowing, the Chicago Federal Home Loan Bank has programs that provide discounted lending to our members to support that. So we are a source of discounted capital for our members so they can offer affordable pricing to their lending or borrowers. So I want to draw you to that as well. We've put quite a bit of money behind that this year. We subsidize the rate on members borrowing for certain types of small business lending down significantly. So, and then the cost of writing down that rate is sort of what we pay to offer that product. We have put $15 million of subsidy into that program this year, which members then, as I said, they tap those dollars to allow them to offer discounted rates to their customers, and we take the cost hit on that.
What's your source of income? Where do you get your money from?
Yeah, each federal home loan bank, as I said, is privately capitalized, and our primary source of income is through the business we do with our members. So beyond the community development oriented activities that I'm deeply involved in, the other big piece of what the banks do, the other big piece of our mission is to be a source of liquidity for our members. So we provide what we call advances, they're loans essentially, to our members. We are a source of capital for them for their regular business. It doesn't have to be for community development purposes. It can just be to support their activities. So we are a source of liquidity for our member financial institutions. That was sort of the original core mission of the banks coming out of the 1930s, was to ensure that community banks were positioned to keep their doors open and continue doing their business. So we are at core a liquidity provider that has expanded, we are providing reasonable rates to our members, but that's still a source of income for us. So we make a spread on our lending to members, and that's part of where our income comes from. We also have become a purchaser of members' mortgages. So we provide a secondary market for some of our members' mortgages, and that's also a source of income for us. Again, we do that at a reasonable rate for our members, at a fair rate, but it does generate income, which comes back to us. And then we have investments with investment income, and but the dollars are not federal. The dollars are not government dollars. They are dollars that we've created, and we are committed to giving back to the community at certain levels.
But who owns you? Private capital?
We are a cooperative, so we are member owned, right? Members buy stock in their federal home loan bank. So we have shareholders that get a dividend quarterly, and and we have a board of directors that oversees us.
Oh, okay, I'm going to act stupid for a moment because sometimes I am. But you're a cooperative, so I'm a bank in Peoria, Illinois, and I decide I want to be a member. I buy stock and then become a member, or become a member and then buy stock.
So there are membership requirements that come down from above to us. They're driven at the federal level, which the thresholds that banks have to meet to be eligible for membership at the different banks. If there is a bank in Peoria that wants to be a member, there's a membership process. They explore that with us. We vet them for membership through our membership team. At the moment they become a member, if we determine they're approved for membership, to actually become the member, they have to purchase the stock per a formula. There's a formula that we apply for how much stock an organization has to purchase, but that stock purchase happens at the time of membership activation.
Well, your website again for people who want to learn more?
It's FHLBC.com, www.fhlbc.com. For the programs that are under my purview, the community investment programs, there's a tab that says community investment, and you can scroll from there. And my contact information is also embedded in there. So if you have questions, we've got teams of people here who can answer them.
Okay.
One thing I will say, one question we do get is, you're a home loan bank. Where do small businesses fit into that? And I would say, and I think your audience will understand this point, and this should resonate. Housing and economic development don't happen in a vacuum. They need to be kind of braided together for them to either one to be successful. And we know economic opportunities are critical for communities and to thrive. And so for residents and small businesses in communities to thrive, we need support on both sides of that equation. So as we think about our mission as a home loan bank, it is more broad.
On that note, Katie Naftzger, I hope I got it close to correct. We thank you. I learned so much on this one for the first time in a long time. Thank you so much.
Well, thank you. I appreciate being on your show.